Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast. All right, everyone, welcome back to yet another episode of the Young Investors Podcast. Ta-da. Episode, the big one, 301.
Very good.
How you going, mate?
Yeah, I'm doing well. Last week's episode was fun. If you haven't seen it, we did our 300th episode, and we did an in-person episode, and it was a lot of fun. It was my dog's birthday earlier this week, so that's the milestone or the celebration of the week. So. That's what's been going on in my world. What's been going on in yours?
Oh, lovely. Happy birthday to Lucy. What's been going on in my world? Nothing too much. Just trying to get some content in the bag. They've been here, there and everywhere, but this week I've been back in Melbourne, so just trying to knuckle down and get some stuff done. Starting to work with some clients as well as another arm of our business. So we're starting to do post-production work for clients. So I've been working with a couple of clients this week to start to do some social media strategy with them and some planning. So that's actually been really fun. I'm excited to do more of that in the future. So shameless plug, if you are a business and in need of any post-production social strategy work, then please hello@newmoney.contact. Anyway.
Yeah, very
just
good.
Gonna jump in there.
Yeah, and
I didn't even tell Hamish that I was gonna plug that.
Yeah, I better be getting a cut of whatever business comes your way.
Yeah.
No, but
so true.
Yeah. So what are we talking about today? We've got it's earnings season. Earnings season has kicked off once again. It comes around so quickly.
Yeah.
The Q3 2024 earnings for most companies, although we get the occasional company like Nvidia that's living in the future, and we'll be doing their kind of Q3 2025 or something like that. But we'll talk about kind of the backdrop of earnings season, which will be taking place over the coming. Mostly over the next month. We've got one earnings report that we'll go through. I'm going to talk a little bit about cancelling subscriptions and a little FTC case that's been going on around that. And what have you got?
Yeah, I'll be talking through TSMC, which will be quite interesting. And also, we have to talk. The first thing we'll talk about, we've got to talk about this SpaceX rocket. Did you see it, Hamish?
Yes. Yep. The sky chopsticks.
Yeah, exactly right. It's pretty awesome. So we'll talk about that in a second.
Yeah. So with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings, and manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days. So yeah, what's been going on with SpaceX? I'm sure many people have probably seen because it was quite a milestone.
Yeah, normally I like to watch these big events live if I can, but I don't know why. I was just so disorganized, or maybe I was just distracted, but I totally missed it. And actually my dad, just in the middle of the night, was just saying, "Oh my God, did you see that?" And I was like, "Oh, what have I missed?" And then he linked it to me, and the SpaceX rocket had been caught, which is quite interesting. So yeah, it says here SpaceX launched its 5th test flight of its Starship rocket on Sunday and made a dramatic first catch of the rocket's more than 20-story tall booster. That is the wild thing. I think the actual height is 71 meters.
Yeah,
of the booster.
Yeah, that's mind-blowing. Yeah.
And they caught it.
Yeah.
That's wild.
Yeah, saying that it caught it is like absolutely it sounds ridiculous if you haven't seen it, but it is the perfect description. It really was like basically catching it.
Yeah.
Crazy.
For those that haven't seen it, I definitely recommend you go onto YouTube and just watch the catch of the booster. So what they did is they launch up the first and second stage, or the first stage with the booster, then that you have stage separation, and the first stage goes off into orbit, and then the booster comes back, does a boost back burn, and what they want to do is essentially they want to lower the weight of the aircraft in total. The less weight you have, the more usable tonnage you can put into orbit. So they decided to remove the landing legs. So we've all seen the images of SpaceX landing their Falcon 9 with the landing legs that come down and it lands on the drone ship or whatever. This time for Starship, they deleted the landing legs. So instead, they thought, why not we put the catch mechanism on the ground, because that saves us weight. And so they designed this, what they call Mechazilla, which has the two chopstick arms that come in as the rocket's landing, and they try and catch the rocket. And this is the first time they attempted it, and they absolutely stuck it. It was unbelievable. It was seriously unbelievable. It's like I think they said the largest flying object that's ever been, and they just caught it.
Yeah,
which is wild.
They
said it's like catching a falling skyscraper. That's what they did.
Yeah, it's so bizarre because I'm not super, I see the live events, I see the replays of some of these live events, but I'm certainly not someone who keeps up to date with, what they're doing and what they're planning. So it completely caught me off guard. I was like, wait, what is this? It's crazy they could even conceivably do that and then do it first go, which is pretty impressive.
Yep, it says the achievement marks a major milestone towards SpaceX's goal of making Starship a fully reusable rocket system. So Starship is SpaceX's next generation rocket designed for travel to the moon and to Mars. SpaceX won a multi-billion-dollar contract from NASA to use Starship as a crewed lunar lander as part of NASA's Artemis moon program. The agency is working with SpaceX to develop the company's Starship Human Landing System, HLS, which will land astronauts near the moon's south pole during Artemis 3 and Artemis 4 missions. So Elon Musk's company launched Starship 8:25 a.m. ET from its Starbase facility near Brownsville, Texas. The rocket Super Heavy booster landed in the arms of the company's launch tower. Yes, we know that. And this actually was quite an event in the making, because it actually took a long time for them to even get regulatory approval. They'd actually been ready for this launch, I think, since August. But it took the regulators a very, very long time to approve it. Elon Musk is not a particular fan of the FAA. In fact, it says he's harshly criticized the FAA, including for proposing a $633,000 fine against SpaceX over launch issues and for the delay in approving the license for Starship 5, which the company says has been ready to launch since August. Yep. Musk has called for the resignation of the FAA administrator, Mike Whitaker, and threatened to sue the agency. So there you go. They're not on the best of terms.
Yep.
But putting that aside, Hamish, the reason I guess I should say why we're including it and why it's so important is that there is an interesting economic story behind this, because this is really going to be the first rocket that can take serious payloads up into space and do it quite cheaply. So this actually might surprise you. I don't know if you looked into the economics before, but their current commercial vehicle, the Falcon 9, costs $62 million each launch, right?
Yeah.
$62 million to launch a Falcon 9. It carries 22,800 kilograms, so 22.8 tons to low Earth orbit. Mm-hmm. So overall, costs $2,719 per kilogram.
Right.
It's quite expensive. Starship, however, because no hardware will be lost on the Starship flight, they're going to recover everything. The only cost will be fuel, maintenance, and the use of the pads. So they're expecting it'll cost around $10 million or less per launch of future Starship versions.
Wow.
And according to Elon Musk, he reckons eventually they'll get that down to $2 to $3 million per launch. So you're going from $62 million per launch to, let's say, conservative $10 million.
Yeah.
And even if you do that, the Starship So it's a lot cheaper than the Falcon 9 to launch, and it also carries a heck of a lot more. Instead of carrying 22.8 tons, it carries 150 tons to low Earth orbit. So at $10 million per launch, you're actually getting the cost per kilogram down to about $66, which is quite the difference.
So when are we booking our tickets to to the Red Planet?
Yeah, how much would that cost? How much do you weigh? It might cost me a little bit too much. I've been eating too many pies recently.
Yeah, might be a little bit cheaper for me.
But
I wish that's how plane tickets worked. It was just weight based.
So yeah, that would be very handy.
Yeah.
So I thought that was quite interesting. Starship is making space travel a lot cheaper, a lot cheaper. But anyway, well done, SpaceX, catching a flying skyscraper with some chopsticks.
Will SpaceX was SpaceX planning on going public? Because they're not a public company, are they? They're still a private company.
No, they're not. They're private.
And I think maybe there was was there some like SPAC talk at some point? But I haven't. I can't really recall. But it would be cool to see them become a public company maybe at some point.
Yeah, they wanted to chop out the Starlink segment and have Starlink become public.
Right.
But they haven't done that. But I don't know how it works with, I guess Boeing is a public company, but there's Elon Musk always talks about how, these rockets are considered like advanced weapons technology of the United States. And I don't know if that plays a role, but I mean, probably not, considering how many weapons and arms manufacturers are public. So I don't really know how it works, but They at least wanted to spin off that Starlink section of the business, but they haven't done that yet.
Right. Okay. Fair enough. Well, from a private company to the public markets, as I mentioned in the introduction, it is earnings season, and big tech and AI is once again front of stage. So I wanted to give maybe over the coming weeks, we'll probably cover a number of different companies' quarterly earnings. Maybe just to give a bit of a summary of what's going to be the focal point this quarter. As I mentioned, big tech and AI is front of stage. You have the Magnificent Seven companies that continue to be an enormous piece of the S&P 500, an enormous piece of the US stock market. And their earnings and what their earnings do is extremely important in terms of the direction or the earnings being produced by overall American companies. And big tech companies have been spending big on AI, artificial intelligence this year. That's been the story of 2024. So you have Microsoft, Amazon, Google, Meta combined have spent so far in the first 2 quarters of the year $106 billion on capital investments. So that includes all of their capital investments, but mostly it's been, particularly the increase this year has been buying graphics chips from Nvidia and building other AI infrastructure. And so it's a lot of money, just 4 companies spending a total of $106 billion.
Yeah, a lot of these companies, just because of their business models, right? Because they're online-based businesses, they don't have that much. They don't have the capex of, say, a Berkshire Hathaway that needs to keep, trains and all sorts of like physical assets good and going. They're mainly just investing in digital capability, which comes down to like data centers, as you say.
Yep, exactly. And so that's the first kind of half year we've seen so far. This quarter, Q3, is expected to ramp up spending even more. Wall Street is expecting $60 billion spent in the quarter from those tech names alone on capital expenditure, which would be a 56% increase from what those 4 companies spent in total last year in the same quarter. So $60 billion they're expected to spend during the quarter.
That's huge.
Including if we also include next quarter as well, so the full year for 2024, what does the market think these 4 companies are going to spend in total on capex, which again is mostly going towards this AI stuff. Those 4 companies in total for 2024 are expected to spend $231 billion. So It's fair to say that companies are investing, or at least some of these big tech names are investing heavily in AI. Of course, the biggest beneficiary of all of this spending so far has been Nvidia. Data center revenue for their third quarter earnings, which come out in about a month actually, but their data center revenue is expected to be $28.6 billion, which would represent nearly a 100% increase from last year. So Nvidia has been growing obviously at an astounding rate, but they're still posting insane growth rates, or expected to, I guess. They haven't technically done it yet, but they'll be in that ballpark of growing their data center revenue by almost 100%, which is pretty crazy. Certainly
that is wild.
Yeah, so certainly in terms of in terms of this earnings season, that's going to be the main focal point. The stock market has done extremely well this year, and a lot of it is on the back of these companies performing really well, but also the expectations that these companies will continue to grow their earnings also increasing. And so how they perform, whether they meet expectations, what they forecast going forward will certainly at least have a short-term impact that's kind of interesting to observe. And in terms of the tech names that we will see first in terms of earnings season, we're going to get Google and Meta on the 30th of October. So that's not next week, but we'll probably talk about that the week after episode. As I said, we've got Nvidia, which is not until November, and then there's the other kind of tech names and other types of companies we'll probably talk about on the podcast in between.
And kind of adding to what you're saying, Hamish, one of the companies in this, it's a very big beneficiary of the AI boom, has been TSMC, so Taiwan Semiconductor. And they actually released their earnings just the other day. So I thought that maybe next up I could take you through some of those earnings just on a high level, just so that we can kind of see the effects that are taking place, which relates. Obviously, TSMC is on the hardware side. They are the world's largest manufacturer of semiconductors. So we talk about AI growth in two parts. There's all these companies, tech companies, Google, Meta, Microsoft, all investing in the software of AI. Whereas there's also the other half, which is the Nvidias and the TSMCs, which are the hardware side of things, which are really the main beneficiaries in terms of revenue at the current time. When we're talking about AI. So with that said, TSMC, hey, they for those that don't know, as I said, it's the world's largest semiconductor manufacturer. They have, guess what, Hamish? They have 60% market share. 60% market share. And then the next largest is Samsung at 12%.
Wow, that's great.
They are.
Wow, that's crazy.
Yeah,
I wasn't aware that they had such big market share. That's crazy. Yeah.
And for those wondering, hang on, you're just talking about Nvidia, second largest company in the S&P 500 at the moment. Where's Nvidia? Nvidia designs the hardware, and then TSMC actually goes and manufactures it. So they're both involved in. They're on the hardware side, but they're on different stages. They're in different stages of the hardware cycle. So Nvidia is a customer of TSMC. TSMC does a lot of their heavy lifting for them. With that said, shares of Taiwan Semiconductor Manufacturing Company, the world's largest producer of advanced chips, serving clients such as Apple and Nvidia, jumped nearly 10% during trading on Thursday after the company reported, get this, a 54% hike in net profit in the third quarter. Yeah, big, massive earnings. The company expects annual revenue growth in the last 3 months of the year as global chip makers continue to benefit from demand boosted by artificial intelligence applications. So the company's net income was 325.3 billion new Taiwan dollars, which is 10.1 billion USD, over the July to September quarter, surpassing an LSEG estimate of 300.2 billion, cited by Reuters. Net revenue came in at $23.5 billion in the third quarter, up 36% year on year, with TSMC's gross margin, I find quite interesting, rising to 57.8% over the July to September, compared with 54.3% in the same period last year.
It's quite the pricing power. That's crazy.
Exactly.
Yeah.
Quite the pricing power when you're seeing your margins rise like that. It says here, quote, based on the current business outlook, we expect for our fourth quarter revenue to be between $26.1 billion and $26.9 billion, which represents a 13% sequential increase or a 35% year-over-year increase at the midpoint, TSMC Chief Financial Officer Wendell Huang said during an earnings call following the results release, according to a call transcript produced by FactSet. In the third quarter, quote, our business was supported by strong smartphone and AI-related demand for our industry-leading 3 nanometer and 5 nanometer technologies, TSMC said in a statement referencing its semiconductor nodes. So things are going well on the hardware side, Hamish.
Yeah, it is interesting kind of looking at all these different businesses because, obviously if all of this AI investment ends up paying off, the biggest beneficiaries are going to be the companies investing in, building out the data centers like, the Metas and the Googles and that sort of thing, if they can monetize it. But at least for right now, the first people who are benefiting or the first companies that are benefiting are the ones selling the hardware. And it's also entirely possible that, they're selling way too much hardware at an extremely high price that these companies don't actually recoup with their generative AI models, in the next couple of years or something like that. So yeah, they get to be the first to generate all of that revenue. They get to front load all that revenue, and they take very little risk in terms of the actual consumer, I guess, application or use of and development of generative AI and other kinds of AI use cases. So it is just interesting that you get these different players and they're making different kinds of bets.
Yep, it's like is it a Warren Buffett quote where you'd prefer to buy the goose that lays the golden eggs as opposed to just buying the golden eggs themselves or something like that?
Yeah, something like that. Yeah,
it's kind of the case here where you're buying the goose with the TSMC as opposed to buying like a Google or a Microsoft or something that's just the golden egg or is hoping to find the golden egg. But yes, Hamish, you mentioned capex before.
Yes.
Which I thought was quite interesting because they did make note of that. TSMC now anticipates its capital expenditure for this year will pick up to slightly higher than $30 billion. It said during its earnings call. The firm's capex costs edged higher to $6.4 billion in the third quarter versus $6.36 billion across the 3 preceding months. But what's really interesting, we're talking about, how is the AI boom going to keep going? Are these earnings going to stay elevated for a long time, or once the Apples and the Googles and the Microsofts buy the chips, is it going to kind of phase out a little bit or plateau? The reason I say what's interesting is that TSMC's earnings beat comes in the same week as Netherlands-based ASML, which supplies machines to the Taiwanese company, actually issued lower than expected forecasts for net sales, sending their shares plummeting 20% on their earnings. So yeah, it was really interesting because leading into this, people were actually a little bit skeptical about TSMC's earnings because we'd already gotten that information from ASML, who supplies the machines to TSMC, and they were coming out saying, look guys, the plateau's here. It's not looking as good anymore. The hardware side seems to be plateauing out. And then obviously TSMC comes through and just like beats all estimates. So it's really an interesting point for the companies on the hardware side. A lot of people are on the fence as to whether this hardware boom will continue at the same pace as it has been. Whereas the other, some people are kind of on the ASML side saying like, what's going on? Whereas a lot of people are still obviously very bullish. So it's either way, like we're not going to be here making a prediction, but either way, it's going to be very, very interesting to see whether, as you say, there is this sustained demand out into the future.
Yeah, it is. It is interesting, and I guess if you're an investor in Nvidia or TSMC or any of these companies that are very richly valued, and there's these huge expectations, you kind of probably do have to be watching all of these little things. Their suppliers and how their revenues are changing, and what they're projecting. Because you definitely don't want to get caught on the side of still holding the stock if there is a significant drop off in demand. You saw with some of the like a Cisco in the internet bubble, and the drop off in demand for their hardware products. If you're investing in some of these companies, sure, they can continue to grow and they might continue to benefit, but there is that there is that risk that the demand kind of is temporary. And so it's I guess it's not surprising that people are kind of watching all of these things really closely for any potential slowdowns in demand for these kinds of products.
Yep. So it will be very interesting to see kind of how this all plays out. I don't claim to have any particular insight when it comes to artificial intelligence, but I will just happily watch what happens from the sidelines.
Yeah. Exactly.
But yeah, with that said, Hamish, we are going now into a little bit of earnings.
Yes.
One of your closely followed businesses in Netflix. They're always early in the earnings cycle.
Yes.
Interesting to see how they're going.
Yeah, I definitely don't understand semiconductors or AI enough to invest in it, but I understand movies.
And TV shows, I'm right there.
Yeah. I watch plenty of those. No, there's a little bit more to it than that. But Netflix did report their Q3 earnings, it's been interesting for Netflix because it's always the kind of earnings. It's always the kind of company that or a stock during earnings where it's not surprising to see it go up or down 10%, just because there's a lot of focus on it, and there's a lot of focus on kind of it's not a vanity metric, but things like their total subscriber numbers, which a lot of people like to make kind of short-term bets on during earnings. So it tends to be an interesting one to follow. And they've reported a pretty impressive result again, probably for maybe the third or fourth quarter in a row, which has been interesting to watch. Revenue came in at just under $10 billion, $9.8 billion, up 15% year over year. They're still somehow adding subscribers. They added subscribers in every region except Latin America, where they actually raised prices 10%. So they saw a slight decrease in subscribers. But the thing that I have been watching, especially the last couple of quarters, which has been kind of interesting to me, is that they're still adding subscribers in the US, which is just, they added 700,000 new accounts in the US so they have 85 million accounts now in the US. And I think they have 110, or it's US and Canada is the segment, and there's 110 million households in UCAN. And so it's crazy that they're also pay TV households, so households that have previously bought cable TV. And so they're somehow continuing to add households in that region, which continues to surprise me. And
is there a big impact from this crackdown on password sharing, or do you think that's mostly we're over that now?
I was listening to the conference call that they did, and I think they still think they're getting some effect of that rollout. But for the most part, I think that's kind of that's come and gone.
That's done.
Yeah, most of that was the first quarter of this year, and then a couple of quarters last year. And they also still think there's still room to grow margins. So they're actually expecting, as has been the case for quite a few years now, that content spend will grow at a slower rate than revenue. And then therefore, even if they grow their top line at 15%, which they did, net profit reached $2.4 billion, which was actually a 40% increase year over year. And so if you combine a decent revenue growth and can improve margins in a meaningful way, it can look very, very healthy on the bottom line. And that's really been the story of Netflix over the last year or so.
Solid. Nice.
What have I got here? Where is future growth coming from? So they still expect adding new members to be the main driver of growth. So they think that's going to continue. They still think that they can continue to add new members, particularly outside of the US and Canada. There's still quite a lot of room to grow in Europe and Asia and Latin America. They've started growing their advertising revenue. They kind of said that this is still very low, but it's beginning to become meaningful. So that's kind of where they think that growth is coming from. As always, they kind of spend a bit of time talking about engagement. How are people actually spending their time watching television, in their living room, because that to them is the most important metric. If people are spending more of their time watching Netflix, then that's a good indication that people like the shows that they have. So they point to one particular type of data, which is the Nielsen monthly, it's called the Gauge, TV viewing data in the US. And it's really interesting if for anyone, even if you're not, investing in the space, it is interesting just to see how much time people spend in their living room on the different platforms, whether it's broadcast TV, cable TV, YouTube, Netflix, Paramount, all of these different kind of platforms. So total streaming is now 41% of total TV viewing. So it's actually been 41% for a couple of quarters, but over time, that's obviously been taking considerable share away from broadcast and cable. Netflix, their share actually stayed the same, 7.9% of all TV viewing. And the biggest streaming platform in terms of TV viewing in the US is still YouTube. It's been the dominant one. It's 10.6% now of total TV viewing time. And this is lounge room TV time. So this is actually in front of TVs. And so,
crazy.
YouTube is obviously, if you included all of YouTube with mobile and computers, they wipe everyone out because people are watching way more YouTube than they spend, any time watching things on there, compared to the time spent on TV. But even in the TV category, it is interesting to see that YouTube is still, it's the biggest streamer for a company that doesn't actually directly spend on content. I mean, they pay us, but they pay us based on what we generate in ad revenue, essentially. They don't have to do a Netflix and upfront kind of invest in content. So it is fascinating to watch that.
It's clever. It is a very clever model, isn't it? But yeah, it is kind of surprising. I mean, I've known that for a little while, but I remember when I learnt that bit of data, and I've actually told that bit of data to a few people as well that say, oh, I don't like to watch YouTube. And, oh, I'm always on TikTok. I don't like YouTube. And I'm like, well, did you know YouTube is actually really, really well watched? Yeah, it is crazy.
Yeah. And the other piece of information that they provided around engagement was that Netflix now says the average member of their 440 million odd members spends 2 hours per day on average on the platform. So that gives you an idea of how much time people are spending watching Netflix, or at least in the Netflix app. I would be interested to see how much of that 2 hours is people just legitimately trying to find something to watch.
Yeah.
Because it could be pretty
so
significant. Yeah.
That's one thing I've never really understood. I don't really suffer too much from that problem. But yeah, I've seen, a lot of people, friends, my partner just like scrolling through, and I'll walk away and come back 15 minutes later. They're still scrolling through. Yeah. Like, they haven't picked something yet. I'm like, wow, you really like to look at the title cards, the thumbnails? Okay, sure.
Yeah, that's definitely me. I don't know, there is something about having knowing that you have an endless amount of choice. It's the same for YouTube and scrolling through YouTube. That kind of gives you, or at least gives some people, I guess, like analysis paralysis. It is interesting. Yeah. There definitely is something to be said about the value of being able to turn on like a TV channel and it's just playing like constant episodes just for like background noise. Because sometimes when you want to watch TV, you might be cooking dinner or something and you just want to put something on. You don't want to sit down and select, a movie that's going to be, blow your mind for the next 3 hours. You just want some kind of some C tier, B tier background noise comedy, just humming along in the background, so it isn't. There is.
That's when you put on the Young Investors podcast.
Yes, exactly. Yeah, shout out to all those people
Some C
cooking.
tier, B tier background noise.
Yeah, shout out to all the people
That's us,
cooking
baby.
dinner.
Yeah.
Cooking dinner right now. But
If you're cooking dinner as you hear this right now, you have to leave us a comment and let us know. You have to. Please do. Please. That's so funny.
So yeah, but that we'll never get that stat from the streamers, of course, how much time people spend in the menus versus actually watching shows, because it's probably an alarmingly high number. But that would be interesting.
Yeah,
that would be interesting to see. But yeah, that was Netflix's Q3 earnings. Investors liked it. The stock was up about 5% in after hours. But as is the case with the Netflix stock, who knows what's going to happen tomorrow? It might go up 10%, drop 10%, might be delisted. No, but it does bounce around quite a lot. So yeah, take that with a pinch of salt. It might be very different by the time you're listening to this.
Yeah, nice. All right, well, I'm going to let you keep right on rolling, Hamish, because you've got a little piece about what are you talking about next? Cancelling subscriptions. So very much in the same vein.
Yeah. So yeah, from people who like Netflix to those if you don't like Netflix, well, I've got something for you too.
All right, here we go.
There's an interesting FTC case around the ways that we cancel subscriptions, online subscriptions and that sort of thing. That I thought was really interesting. So canceling.
Hopefully this really hooks into Amazon. Please let this hook into Amazon.
I have a couple of things to say about Amazon. Which
okay.
Yeah, you can't talk about canceling subscriptions without talking about Amazon or even Adobe, for example, as well, which we'll talk about.
Yeah.
But canceling unwanted subscriptions just got easier for Americans. So businesses often use, I'm sure as everyone is fully aware, they often use kind of friction in the cancellation process to make it annoying or difficult to leave. I'm sure many people have experienced this. There's the nice businesses where you go to your account and you click the little icon and there's a button right there and it says cancel and you click it and it says, are you sure? And you say yes and it's done. And then there's the companies that add a lot of friction. There's so much mileage between you and the cancellation. Yeah. And Amazon is one of those companies. There's many ways that companies add friction. Maybe if I missed any, feel free to chime in with some if you can think of any others. But these were the ones I could kind of think of. Having to click through multiple pages. So often there'll be just many different clicks. Click, 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 click.
Are you sure? Are you sure you're sure? Are you sure that you are sure that you're sure?
But do you just want to downgrade? Or maybe you want to upgrade, actually? No, okay.
Yeah.
Well, do you want to...
So true.
Yeah. Hiding the subscription link in a non-intuitive spot. So, sometimes it will be right next to your payment information in that section, which makes perfect sense. Why would it not be there? Sometimes they just hide it in some ridiculous spot. And then on the many pages that sometimes like Amazon puts in front of you, they'll often switch the go back and next button, which might seem like a little bit of a trivial thing, but it's actually intentional. So where normally the next will be on the right side of the screen and go back is on the left, they'll actually switch it for one of the pages so that people get kind of stuck in a loop, which you might think, what does that even do? And for most people, it does nothing. But when you're talking about maybe 100 million people or like 50 million people trying to cancel, it can actually move the needle if people just go, I don't have time for this, and they just don't cancel it. It actually can make a meaningful difference when you're talking about something like Amazon, where you have a lot of people who are kind of churning. Having the go back button bolded and colored, while the yes I'm sure button is like kind of plain text and kind of less pronounced. And then they'll also sometimes do kind of fake, like air quote, kind of success pages. So there'll sometimes be, one more button to click to actually cancel, but the page is designed the exact way that a checkout complete page looks when you finish shopping on a website. Yeah. So it looks, your brain it kind of looks like you're done, but you're not. There's one more button that you have to press.
Then really small print at the bottom, there's a tiny little button saying confirm.
Yeah, exactly. And
confirm cancellation, and you didn't click it.
Exactly. And I'm sure everybody's experienced at least a few of these things. And if you have Amazon Prime, you've experienced all of these, because Amazon actually just throws the entire, they don't just throw the book at you, they throw the entire library of friction at you. Amazon is the most annoying. I could talk for hours about how easy it is to accidentally subscribe if you've already got your payment information in, and how difficult, or it's not difficult, but it's just a lengthy process to
it's
cancel.
Convoluted. Yeah. The most annoying thing is when the cancellation process starts getting deceptive. That's when I really dislike it. Like, for example, this is not a cancellation. This is actually me trying to pay for a flight the other day. But going through the pages of trying to pay for my flight, I got to one where it was the added extras page. I don't need any added extras. I just want the flight. It's going from Melbourne to Canberra. And there was a whole bunch of extras. And then in a very, very light box was capturing all the extras. And then there was a big green button saying continue. As in, I was like, okay, yeah, I want to continue. But then I actually saw, just before I clicked down the bottom, there was actually no thanks. So the continue button was actually continue, yes, I would like to buy some extras. Whereas the no thanks button at the very bottom was the one that would actually take me to the next page. That's very annoying. The big green button, which is essentially going to lock you into additional cost. I find that very deceptive. And I'm not someone that, I don't know. I don't take too kindly to being deceived. No. That makes me annoyed.
Yeah, especially if it says continue and not kind of like add to your order, or there's there isn't an indication on the button or something which definitely happens a lot, that you're actually adding to what you're previously purchasing or something like that.
Yeah.
That is, incredibly deceptive, because it just feels like you're just continuing in the process when you're not. You're actually making a change to your purchase.
Yeah.
And so, yeah, as you use the perfect word for it, which is the way to describe it, but also the legal definition, which is it's deceptive. It's deceptive marketing. And so on Wednesday, the Federal Trade Commission mandated that businesses give consumers an easy way out, just as simple as it was to sign up. So they voted 3-2 along party lines to issue a Click to Cancel regulation that eases the process of dumping unwanted recurring bills. And
Good.
The FTC chair, Lina Khan, said, too often businesses make people jump through endless hoops, Amazon, just to cancel a subscription. I'm pretty sure she did that cough and Amazon in her quote as well. The FTC's rule will end these tricks and traps. And unsurprisingly, there were lots of business lobby groups who were opposed to the change. Surprise.
I'm sure there were.
What a shocker.
I'm sure there were.
Trade groups representing publishers, advertisers, and video game companies opposed the FTC's proposal to the rule that it issued in March of 2023. So that was when they kind of issued it. Today they this week they voted on it. The business groups said the FTC overstated consumers' wariness with ending subscriptions. The News Media Alliance said at the time that the new rule was unnecessary because many states already regulate the cancellation process. Daniel Kaufman, a partner at Baker Hostella law firm, said that is a huge authority grab for the FTC. They're not just focused on how you sign up and how you cancel. If you happen to be selling something with a subscription, if you make any misrepresentation about the product, the rule is in effect and the FTC can go to federal court and get civil penalties against you. And I don't know, maybe you agree with that it's an overreach. I mean, that's a fair approach. To me, I think it's a little silly. I think, I think a good... You could make the argument that these kinds of small little rule changes for businesses mostly hurt small businesses because Amazon can just kind of snap their fingers and make the change because they have the resources to do so. Whereas for small businesses, it's a little bit more difficult. It's a little bit more annoying. It's a little bit more takes away from their business. But I think it's pretty unlikely that the FTC is going to be going after small businesses for this. I think it's pretty clear who are the targets of this, this rule change. It's Amazon, it's Adobe, it's these big companies with millions of subscribers, and that they know that they can make millions of dollars in recurring revenue from, changing the color on a button or hiding the button, a few pages back.
Yep. It's crazy, isn't it? And I would even say that, what did they say here? That they thought it was silly because of the states. Where was that? The states are already doing it.
Yeah, up here.
Where did you say that? Yeah, I would say that, if they think it's silly because the states already regulate the cancellation requirements, then the states aren't doing a good enough job.
Yeah, it's that was the News Media Alliance, which this is a part of a Wall Street Journal article, and the Wall Street Journal is a part of the News Media Alliance, and it is kind of funny because I'm subscribed to the Wall Street Journal, and their subscription, you have to call them up to cancel it. There's not even a button, which is the most insane. I'll talk a little bit about this in a second as well, but that is the most insane thing that in the modern day that a company can require you to call an American. Or I'm in Australia. I have to call an American number during American business hours, which is like the middle of the night, in order to cancel a subscription when they could have just added a button. Like, if that's not anti-consumer, I don't know. I don't know what is.
I've actually gone through that process as well, because I used to be subscribed to the Wall Street Journal. I'm not anymore.
Tell me it's good.
Going through that cancellation process on the phone, it's even more effective at, making sure you don't cancel, because there's actually a human being on the other end that can add, can add emotion to the process. And you'd be like, oh, that's so sad to hear that you want to cancel. Why? Why do you want to leave us? Can you tell us why at least? Like, kind of guilting you into canceling. And I'm like, oh, I just don't want it anymore. I'm just spending way too much. They're like, oh, that's so sad. We're actually going to do you a special deal. We're going to give you the next 3 months for $1 a month. How does that sound? Because then that'd solve your problem of it being too expensive, right? It's like, shut up. I just want to cancel.
Yeah. Ridiculous. So yeah, as I said, a few more details of kind of the FTC's, which kind of FTC's law change, which or their decision, which talks about this. These kinds of companies that do require you to call up to cancel. Consumers can't be required to interact with a live or virtual representative, such as a chatbot, unless they consented to that step when they initiated the subscription. And so I think, it's...
So we've agreed to it in the T's and C's probably.
Yes. So, will this change actually change anything for companies like the Wall Street Journal? Probably not. Because if you want to subscribe to the Wall Street Journal and it says when you're subscribing that if you want to cancel, you have to call up, well, I guess you can just not sign up, but you want to sign up to the Wall Street Journal. So what are you going to do? And so I think, some companies that want to still be able to do that will be able to do that. But at least I guess for others it'll stop that. If a consumer is required to cancel over the telephone, the rule says the sellers must be available during normal business hours to process the request. So you can't say you have to call up to cancel and then they just never answer the phone. Obviously, that's not quite fair.
Yeah, all our operators are currently busy. Your estimated wait time is 5 hours.
47 days. See you next month.
Yeah.
Or you can visit our office.
Yeah. Which is the arse end of nowhere.
Have to jump on a plane to cancel the Wall Street Journal. No, that would not be good. Also, as I said at the beginning, it's no surprise that Adobe is caught up in all of this cancellation stuff. Another company, for some reason, doing everything in their power to annoy their customer base, whether it's on the product or on the cancellation side. Earlier this year, the FTC alleged that Adobe failed to disclose early termination fees for software subscriptions and made it harder for customers to cancel than was necessary. The Justice Department filed the lawsuit in San Francisco federal court on the FTC's behalf. Adobe asked the judge to dismiss the case. The company warns consumers The company warns consumers about the consequences of cancelling, such as losing access to their projects, but customers can and do cancel simply and easily, the company wrote in a motion filed with the court with the court. And simply and easily, okay, that's up to debate. One thing that Adobe does do, I just wanted to comment on this, maybe get your thoughts on this, is they're one of those companies where when you go and cancel, sometimes they'll offer you a massive discount to try and just keep you kind of subscribed. And I personally don't, I'm curious to hear your thoughts on what you think about companies kind of doing that. I don't mind it. I think it's a fine marketing tactic, obviously. It's fine. And, sometimes it's great because, someone can tell you about it and then you can cancel and see if you can kind of get that deal as well. And then you might get a discount for 12 months or something. So it's just a tactic. But there is something to be said about companies rewarding their least loyal customers. Phone bill companies do this, electrical bill companies do this, where they just increase prices incrementally on the people who are consistently subscribed and consistently paying. Yep. And it's the people who switch, it's the people who leave that they're offering the best discounts to. And obviously it makes sense because they're losing those customers. It makes sense they do it logically. But there is something odd about that they don't reward people for being a loyal customer, which kind of rubs me the wrong way.
It's the same fallacy as like the insurance company problem, where the best drivers subsidize the worst drivers. Yes. Like that's how insurance works. Yeah, it's basically if you never make a claim, then all your insurance premiums just pay for all the people that are bad drivers and do make claims.
Yeah. Yeah, pretty much.
So it's kind of funny like that. But yeah, I think there is something to be said there where you're right. When you want to leave or you're the least loyal, then they're like, oh, but we'll give you a great discount. And then all the people that have been there for years paying full price are just like, you can have a price rise. There is something to be said there. But I think I don't think there's anything that's going to change there.
No. I just, it's just an interesting kind of observation.
Yeah.
And classic Adobe, of course. Product's terrible. They don't update it properly. When they do, it makes your computer laggy. They increase their price. They just did a 10% price increase for, I don't know, no reason. Like the product's been the same for a very long time. So yeah.
But I will say, if any of you out there happen to be a customer of Adobe, go to cancel because you'll get a discount.
True.
I'm pretty sure that system is still in place. So if you didn't know about that, go and abuse the hell out of it.
Yeah, and it was a lot the last time I did it. I think the plan that I'm on was like $80 a month, and I think it went to $40 or $45 or something like that.
Yeah, I got it for like $30 or something like that.
It was significant. So yeah, they really do beg you to stay.
Definitely. Yeah, it's a good strategy. In fact, I had to get another subscription for the guys in the office. As soon as I got the subscription, on the same day that I got the subscription, I tried to cancel it. And I got a discount.
Beautiful. Yeah.
So it works.
Yeah. Fantastic.
Anything else to talk about on the subscription front, Hamish?
No, so that's it. That's all we've got for this week. Yeah, thanks everyone for tuning in. As always, we'll be back next week to talk, I'm sure, more about some company earnings and whatever else is going on in the world. Go subscribe to the YouTube version of the podcast if you haven't already. We upload the video version of the podcast over there if you weren't aware of this and you're just listening on your favorite podcast app. Thanks to Seeking Alpha for sponsoring, as always, and thanks Brandon for joining me. And we'll be back next week. See you later, guys.
See ya.